3 cheap stocks for 2012. David Peltier, portfolio manager of stocks under 10, finds inexpensive stock with big upside. All right, you have 3 that you're looking at for 2012. The first one, Kodiak Oil and Gas Explorer. This is a big bet on its production cycle. What price does oil have to stay at for this stock to still make sense and have that leverage?
Well, so here's the thing, oil's around 100 right now. But really, when I look at the stock, I think that KOG is only pricing at oil at 70 or 80. That's because the company just recently made a very large acquisition, and this should help the company double or triple its production growth over the next few quarters.
So what's a good buy level for an investor, and what's your price target for 2012? How much upside can we expect?
Sure, I like the stock anywhere around $8, and I think it can ultimately go up to $12. Again, it's trading at a big discount to the group, yet the company is going to produce above average production growth.
All right, the next one you have is TriQuint Semiconductor. Among other things, makes chips for the iPhone. Is this too much of an iPhone play? Are you worried about the slowing shipments for the iPhone 4S?
It's a very good question because TriQuint, Apple, does generate about 20% of the company's sales. That said, this is just a very cheap stock on a valuation basis. Company is profitable, flush with cash, about $2 a share of cash, but also it's trading below its tangible book value. Those 3 things usually don't happen in concert too often, so I think there's very limited downside here.
And Apple has been trading in like a no man's land here. Is that going to weigh on the stock, or can it really shake out under the Apple shadow?
I think, again, TriQuint is leveraged to other players in the group, and not just a smartphone play, different areas in the communication space. So again, I think this is stock that ultimately goes towards 7 or 8.
And last up is Cott, a private label soda and juice bottler. Now, it made about 17 cents a share in the third quarter, which is up 142% from the year earlier. Net income popped 166% to $16 million. When are rising commodity costs going to start to really drag on this company?
Well, I think you've already seen that happen because of all the positive numbers you just mentioned. The stock is down some 25% from its June highs.
Why is the stock down so much? Is it because of the rising commodity costs?
It is. Really, when you look at them, they're getting hurt both on the concentrate side, but also in the metal it takes to make the cans and whatnot. That said, when I look towards 2012, management's very focused on improving its margins. Already have the good top line growth, but they can do even more on the cost cutting side, and I think that's what gets the stock back up towards the double digits.
And what's a good buy level for Cott?
I think honestly anywhere under 7 we're currently trading.
Thanks, Dave. I really appreciate it. So that is 3 stocks with a big catalyst for 2012.